Hello, everyone. Tracy Amal with Amal Agency wanted to explain the types of life insurance. So there's two main types, term and permanent. With term, think of renting an apartment. So the good news is it's cheaper. It's low initial cost. It's simple to understand. The coverage is anywhere between 10, 15, 20, 25, 30 years. The bad news is once that period of time has expired, then you don't have any more life insurance. It builds no equity, and then again, it does expire. The coverage ends at a specific period of time. So the analogy here is renting an apartment. Once you rent an apartment, after you leave that lease, there is no return on your rent and there is no equity. In contrast, permanent is like owning a home. It does cost more, but there are other benefits, even though it costs more. So there's tax advantages, just like a home, there's tax advantages. Premiums are flexible between a minimum and a maximum. It builds equity in the form of a cash value account that you can use for all kinds of things, down payments on a home, a car, supplemental retirement, real estate investing, a number of things. The downside, it does cost more and there is a longer term commitment. So people ask me, well, Tracy, which one is better? Well, that depends on your budget, your preference, your philosophy, that sort of thing. Some people say, I want the cheapest amount of insurance I can get, and then I'll worry about getting other insurance later. Other people say, well, I don't really care to buy insurance that I'm not likely to use or that will run out. So I'm okay with paying a bit more, especially if it builds equity that I can use for other things, kind of like an investment or savings account. So it depends on how you think. What I'd like to do is a blend of both. Let me explain. So here is what the X curve. This is a little bit on how the difference between your obligations and your assets. So any insurance, and life insurance specifically, isn't designed to cover the difference between your obligations or your liabilities and your assets. If you had a bunch of money to cover all of your debt, then you really wouldn't need life insurance. So typically when you start out in life, you have a low need of retirement because you're working, right? You're not going to retire at a young age. You have a high need of insurance because you have more obligations in the terms of your children, your home, education, savings, whatever. You have a lot more of that you don't yet have saved. But over time, your need for life insurance should decrease because those obligations go away over time. You pay your house down, your kids leave, become adults and take care of themselves. And also you're approaching retirement, so your assets are growing over time. And that typically takes place. The cutover point is typically about 65 for most people. So let's say you wanted to cover $1 million. Some people would say, well, let me just go ahead and get the longest term possible, a 30-year term, and that would be the cheapest. The downside of that, it would run out. And what if you haven't met all of your goals, something happened to you, or you couldn't save, you couldn't meet your objectives? Well, then you don't have any more life insurance. So other people would say, well, let me go ahead and just get $1 million in permanent insurance to cover all scenarios. That'd be great if you can afford that. The challenge is $1 million in permanent coverage could be cost prohibitive. It would be expensive. So what I propose is typically a blend, 75%, 25% blend. You get the bulk of your coverage needed in term because it's cheaper. And then you have the lower amount, 25% of permanent, so that you get the best of both worlds. So for the period of time that you need the most insurance, you have $1 million in coverage, 750 plus 250. You can have more than one policy. But when that term policy runs out, you still have permanent insurance to last you for the rest of your life. And all the while you are accumulating cash value that can be used for supplemental retirement. Also, these policies come with living benefits for terminal, chronic, and critical injury that can be used later in life. Let me know if I can help you with anything. Here's my contact information. Thank you.